Good morning, everyone. This is Chrissy from Solstice ATR. Hope everybody's doing great on a Saturday morning or afternoon, wherever you are. Um, you can check us out on Solstice, Twitter, Instagram, and you can DM me on Discord. At the same time, we have a weekly free video. If you like this video, give us a thumbs up and you can subscribe for free. What I want to do in this week's video, cover something under the hood, similar to looking at a vehicle by looking at the hood of the car, opening it up, checking out the engine oil and all that stuff. So what we're going to do here is take a comparison where the market is in relationship. Are we at the high? Are we going to continue higher and reset, or are we going to reset and get a sharp drop? The most important thing we're going to cover the futures, some stocks, some equities, Forex, bonds, as well as Bitcoin and Ethereum. I will start first by taking a look at the combination of the first three instruments combined together by using the S&P 500, the NASDAQ, and the Dow Joe Industrial Average. As you can see, in the last 1, 2, 3, 4 weeks, we have recovered and continued for the last 3 weeks, continuing higher, but there was a reset. So we have about 15, 16 days up market without getting any reset. Does this mean we can continue higher? Possibility. Do we reset? You have to be very cautious here by trailing your stops a little bit more tighter on the up moves. And, if you have positions, make sure you protect that capital that you have built. Let's go break it down one by one. And what I'd like to do is start with the small cap. We can use either the RTY, which is the which is the future E-mini contract, or the IWM. And what I'd like to do is, by looking at it specifically in a specific way, I do have the monthly fibs here. We know we are extended what been consolidating in the last 2 weeks in the Russell. So what I want to do is come into a 30-day 4-hour chart. We know the monthly high was down here and the monthly high and low. We have reset in the last 2 weeks range. We've been range bound in the Russell, have not been able to break up or break down. Usually the Russell, I consider it as either uh, the one that starts to move first up and the one that starts to move first down, or vice versa, or a lagger. As we can see, since we had this annual high last month in March, in April we had a lower high and we have a double bottom down here. Does that mean the market can continue higher? Of course it can. Can it fall down? Yes. And this is the weekly fib for the week. So I want to make sure that you understand, if we break above this range, look for the upside. If we break below this range of this week's range, look for the other side. So don't be biased to one side. This is why I started with the small cap. Let's take a look at right now the Dow Joe Industrial Average. You can use the DOW or the DJI, $ DJI, or the YM, which is the E-mini contract for the Dow Joe Industrial Average. This is the monthly fib from high to low last month. I usually have it in purple. We got to the extension of the 38.2 fib. On Friday, we double topped on the 4-hour chart. We were last week consolidating. We broke up, stayed in the range, and by Friday, we basically Thursday, Friday, we went higher, but we reset back into the close. We looked up. I consider these two a double top since we hit the monthly extension from the zero line going up. That's a monthly 38.2 or 138. Does that mean it can continue to the 1561? Yes. But does it come back to the 23%? And I am watching the 18 in this channel that we broke out of this range to see if we end up holding or we don't hold it. We have a smaller channel up here, what I call a linear regression channel in an uptrend. This is my most important part in the 50 SMA on the Dow Joe Industrial Average on the 4-hour. If I'm going to look at the NASDAQ NQ, let's do the same thing here. As we can see in the NASDAQ, we have the last 30 days range from here to here. We eventually broke out in the last 2 weeks on Monday, and the NASDAQ made the first move going higher. So by going higher, we had the push. We consolidated last week, Thursday, Friday. And eventually on Monday, when we opened, we were sidebound Tuesday we went up. Wednesday we came back down. Thursday we went back up, but we looked above on Friday. This is an annual high for the Nasdaq 100. We fell back down in range, but we stayed in the upper distribution of the last 3 days. An important number that I have mentally in my head is 14,000, as well as the 13,996 in case we need to hold it. If we do fall, I would look for the 50%, 61, and the channel here because it's in that linear regression channel, and that's the 50 SMA. If it's going to continue higher, just make sure you're trailing your stops in the NASDAQ 100 because last week's video, I said keep an eye on the technology sector. It's starting to pick itself back up to the upside, and that's what we saw in the market. Let's take a look at now the S&P 500. The S&P 500 or the NASDAQ is the QQQ, the ETF. The S&P is SPY. That way, in case you want to look at it on the ETF fund or the SPX, which is the major contract in the S&P 500. We can see that the monthly range was up here. We eventually broke up to the 23.38. There's a 15. We broke above the 61.8. That means if I take the extension from here to here and duplicate it to the top, this may be, looking at the 78, 100%. And in the last 2 weeks, the S&P has been grinding to the upside. And what I want to do is just show you how it has been since, this day where the move started. We consolidated in the overnight. That was March 31st. April 1st, we came in. That was the first day push. Tuesday consolidated up, but then Wednesday, then we went side range 2 days in a row. That Tuesday was an inside day. Then on Wednesday, we pushed up. We continued higher. We grinded. Then before the Monday opened, you can see here that the range, when we pushed up on Tuesday, we were inside the range for 1 day back in. Then we continued higher Thursday and Friday. We closed on an upper distribution above the Thursday's high. This is very important number in my head, 14,065 area, and at the same 65.50. And if it falls back through this channel, I would look for the 18 SMA 50 and the 61.8 to meet this channel if it's going to continue higher. And if we break up, that's great. If we don't, look for the reversal on the weekly fib from high to low. That's in the S&P 500. Let's take a look at now in relationship to some of the BTCs, which is Bitcoin. I'll do BTC first. Then we'll go to gold. As we can see, BTC in the last couple of weeks have been range bound, and eventually we broke out of this big box here between the 50 and the 100% on the monthly range. We had a professional gap here. We had another small professional gap here and another pump here, because most of the crypto guys or Bitcoin guys, they call it pump, which is when the market is going up. When it's dumping, they put those laser eyes, red eyes going down in the market, which is, the younger generation. That's how they are. Some of them do trade, know how to trade. Some don't. They just, listen to each other and they try to trade. We are in an up channel. You can see, you can connect those 3 dots. What I'm going to do is connect this line here. This is very important to me. If we come back in, I'm not trying to be biased on either side. I'm a technician. I trade what I see in front of me. If this channel is broken up, so let's make it a little bit better. Remove. I'm going to redo it so you guys can see what I'm doing. I'm going to connect this line with this one here, because this was almost a double bottom. We tested some of this area here in the gap, then we pushed up here. This is the overnight gray area. That means those gray areas, I don't consider them as trading hours. I consider them, these are after hours, and the trading hours are the black areas. I usually to see what the price action in the overnight is in relationship to the trading hours. And these are gaps in the overnight action. That's why I have a mark. So my concern, if BTC cannot hold that 50 SMA and comes back below that, because that was my line, 63,250 last week because of the weekly fib. We went up there, we tested higher, we came back and fell under it. On the weekly chart, you can see that the range is from here to here, and we are below the 61.8 or the 38.2, or you can draw it vice versa. Since we fell back down, you can do it inversely. And what I'll do, I'll change the fib for you guys so you can see what I'm doing. But the reason why I did it this way, because I wanted to see where the 161 is and the 261 down here. Because if we fall through those gaps, there's nothing to hold it till the prior gap down here, and that's my major line. This is line 1 and line 2 on a weekly fib extension if there's no more pump in BTC. Let's take a look at Ethereum, ETH/ETH. This is something that I've added on my list for some of the traders. I do have the monthly fib from here to here. We went, looked above. We did actually 100%. If I duplicate this chart from here to here, this is the double to the top. So we tested the high. Does this mean that we can continue higher? Possibility. Do we fall back in? Possibility. So you have to trade what the charts is giving you and what the technicals give you in the divergence of an instrument. We are in an up channel. This is very important to keep an eye on this small channel here. So that way you are not biased to either side. And if we fall through this one, you look for the 50 and eventually the 61.8 for support. If it does not get that support from that breakout, because this looks like a cup and that's the handle, if it cannot support it, it falls back to the 116 SMA and the prior low of that consolidation before this candle breakout from the prior 3 weeks ago. So let's take a look at now GC gold. And what I'm going to do is go to the daily chart or the weekly chart to show you what's going on in gold, because we are still in a linear regression channel, down channel, but we are trying to pump back up, or I'm saying pump up. What I mean, from that consolidation up here in the 1600, we came back, retested it. Now we're trying to go back up to the prior high. But does that mean that we continue higher, or are we in a linear regression channel that we're going to fall back through, or get the 18 SMA to give us an area where it's going to become resistance and cannot clear the 1823, 1815 in the gold GC? Because, this 1800, 1780 was tested on Friday, and we came back from it. As you can see, the high of it was 1784.7. Does that mean we can continue? Possibility. If not, look for a small reset before continuation, because we are still in that linear regression down channel. It does not mean that we are out of the woods on gold to go 100% fully gold long, okay? So if I go to the daily chart, and in the daily chart, you can see that channel. We are still in it. And what I've done, I can add another channel. We broke out of this channel. We're trying to push up. This is an important area between the 1800 to the 1823 area. That's a very important area, because this is my weekly fib breaking out of these, small wedges that we did. And we continued, we consolidated and broke up. Does that mean we can continue? As long as we can hold 1760, this is continuation to the upside. If we fall below the 1760 or 1755, to be loose on that long position, if you have some from down here, you are in great position, from the 1700. But be careful of it, because it can turn either side, and I'm not biased to either one. And you can have a middle channel right here where we just eventually broke out of. If you duplicate from here to here a line, and you put one in the middle, that's considered like a midpoint Fibonacci on gold. Let's take a look at CL. CL looks like it has been consolidating from the prior month. We'll go to the 30-day range that we are in. Zoom in. We're going to go 90-day, 30 days, 4 hour. We eventually consolidated for 3 weeks in this range, and eventually we broke above that 6150 area. We are continuing, but this is the candle that brought us back down. Very important. If the 61.8 on the monthly fib from high to low, as you can see, this is the low for the month. This is the high for the month in March. We tested the 61.8 exactly to the dot. It's very technical. Crude oil, when we broke out of this channel here, when after the consolidation, we pushed higher, we hit the 61. Does that mean it can continue? Possibility. If it falls through that break out of this channel in the 18 SMA, which is the 6250, be careful of it, because the retracement cannot be just 38, can be 50 and 61.8. Fib back to inside the range, because I have a green box out of the compression after the consolidation. We broke up to the top side in crude. Let's take a look at a couple of ETFs, and I'm going to go through them very fast and do a couple of stocks, and I'll come back to my charts and the reasoning behind it. Okay, let's take a look at the SPY, which is the SPX 500. You can see it's on an uptrend. Watch the 50 SMA in the channel in it. If I take a look at the IWM, that's the ETF for the small cap. Russell 2000. If I want to look at the QQQ, this is the one that moved up in the last week or so. We called this move from here after the consolidation. We said keep an eye on if the Nasdaq is going to come back up. That's the QQQ. If I'm going to look at the ITB, which is the home builders, this is another thing that's been continuously grinding higher. Keep an eye on the builders if there's going to be a slowdown and inflation. If we're going to look at the XLF, that's the financial sector. We can see that in the banking sector, after we had the reset in the month, this is the low and high, we came back in, we consolidated, we created like a cup and handle. We are still in that range of the last 2 weeks. You have to keep on the financial sector if there's any interest rates increase or decrease and what's going to happen to the banking. We can take a look at the XLK, which is the technology companies representing, the NASDAQ 100. And some of them are like Tesla, Amazon, Netflix, Microsoft, Google. I mean, these are the things you have to, Shopify, PayPal. I'm just listing them because they do represent quite a bit of the pull of the NASDAQ 100. If the other ones are not doing well, you have to be careful of that. Let's take a look at the healthcare sector. It's XLV. And we can see that eventually in the health sector, and since the COVID-19 and the vaccinations are happening globally and things are reopening, you have to keep an eye on the healthcare sector if it's going to continue. And we have tested, on the monthly fib, the fib extension, the 38.2. What we can do is take a look at the KRE, I believe. That one is another, S&P 500 or the overall, small. XRE, sorry, it's the small cap Russell 2000, similar to the IWM. This is why I wanted to show it here, because it's in consolidation in that region. We can take a look at the SCHA. Sometimes I use Schwab, sometimes I use Spider, sometimes I use Ridex. So you can see the difference in the different ones you can look at. This is similar to the IWM, similar to the other one. That's why I kind of gave you an idea. If you want to trade small cap, these are some of the small cap. If you want to trade NASDAQ 100, you can do the QQQ or the technology, which is the XLK, or the healthcare sector, or the financial IEF or XLF or TBT. The IEF is the short-term maturity bonds. This is very important to keep an eye on interest rates. That will help you to recognize if there's going to be an increase in interest rates, the par value of those bonds will fall lower. If there's going to be a decrease in the price of interest rates or stay stable, the price of those the ETFs or the bonds, short-term maturity, they start to increase in price and in value. So it's vice versa in relationship. And this is why I showed it here on the 4-hour. You can see that the monthly, we have recovered the 61.8. Can it hold the 50 in order to continue back up or not? This is very important. What I'm going to do is go to the daily to show it to you. This is the only thing I will do in the ETFs. I won't go through the bond. You can see that when we fell through those gaps here, I left some of them here. We came back, we fell. This is the monthly fib from high to low. As you can see, since last time's gap down, we broke out of the channel, trying to consolidate, trying to see if we can clear this area here. If it doesn't, that's very important on the monthly. And we do have, virgin control gaps to the upside in the IEF. So, I don't know if I did the XLF. I'll just go back to the XLF. This is on the daily. I think I did. Let's go back to the 90-day, 30 days, 4-hour. You can see that there was a consolidation. Yes, we did. We showed you the monthly high and low. We consolidated. Now we are in range in the banking sector. Let's take a look at a couple of equities. And what I'll do, I'll finish up with a couple of the charts and outlook numbers in relationship to what the market is. Let's take a look at AAPL. You can see Apple was in the last 3-4 days range bound. It has came up from the prior monthly fib high and low. We broke out to the 38.2. We tested the 50. I do not have the 50 here extension from the 0 line or the 100. Depends how you draw it. So this is my line in the sand to hold for Apple. If it loses it, that 131 is a very important number that Apple needs to hold, or you can hedge that position in Apple if you are long Apple from the prior 2 weeks range after the breakout of this channel here and the consolidation going higher the following week. Let's take a look at the Amazon. Amazon is side range band. Oops. AMZN. You can see after the push up the last 3-4 days range bound, and Amazon should be reporting soon. Let's take a look at Facebook. FB is in a similar situation but had a rounded top. It looks like it's coming back. My eyes are on the backside of the 116 SMA and the monthly fib extension for Facebook to get a small, this was the cup and handle, broke out, coming back to it, should act as support. If it doesn't, you know where you are wrong. Let's take a look at Google. Google is after the push up. We consolidated for a couple of days. On Thursday, we broke up. Then we had a Friday inside day. Let's take a look at NFLX. Netflix is a similar situation to Facebook. It's in an open cone. If the 18 and the 50 do cross, watch what would happen. Let's take a look at Tesla. This is very important. Keep an eye on Tesla because in the last 3-4 days it pushed up. It came back on Wednesday, Thursday, and Fridays, and inside day, still inside the prior week's range. I am worried about Tesla that it cannot clear the 760 and it comes back falling back down to the prior green box where the RSI went above the 50 and continued higher. And this was a consolidation at this rounded bottom. This is the cup, and that's the handle of it right here. This is the handle. This is the cup of it, and eventually broke up. It's retesting that area. If it does not hold this 720, 715 area, be careful of Tesla, or you can hedge your position if you are long from way back down there at the 280, with some options on Tesla. Let's go back to the ES, and what I want to do is just show you the monkey bars on a short term. You go to style, we go from standard to monkey bars. And on the monkey bars, you can see that the prior 5 days range, we were that's day 1, day 2, day 3, day 4. We can zoom back down. I can go plus or minus 1 second. Okay, this is showing us the 4 days. If I just go back a little bit, you can see that every time when we consolidate, this is the week before, you see the push up came back down. We consolidated, continued higher. These are the POCs, value high, value low. POC, we continued higher. And on Friday, we looked up. This is a virgin control point that you have to keep an eye on that has not been tested lower. When we come back through the channels, you draw a channel up and you keep an eye on the time of sale in relationship to the POC. On Friday, this was the close on Friday. The box is the open. This is the close from the day before. This is the box of the open. This is the close on Wednesday where it was a little bit lower. Let's finish up by taking a look at the last 3 instruments, which is the S&P 500 in relationship to the overall market. And we do not have to be biased to either side. And what I want to do, go up here. I showed you this chart and I said I want to look under the hood of a vehicle or overall market. Let's flip the page over one. Here is from April 15th, 2021. I'm assuming, looking at the S&P 500, what can the market do since we had been going up for the last 15 days, 16 days, continuation. We had a couple of glitches inside days for 2 days in April. So what I want to make sure that you understand, since March 9th of 2009, after the real estate bubble, we still continued higher on the S&P in April. If we consider, April 23rd, we're going to be going from April 18th through the 23rd of this coming week. Can we get another 4% higher? Yes, that's what the market did. And that was the outcome, going higher from that period of time to here. Then eventually it corrected after that period and we fell back down 15%. And from the prior, S&P being at 1170, 12,000, 1,217, we fell down to 1,024. If we're going to assume the same scenario in the S&P 500 as of today's date, which is April 15th, I used April 15th's number. I didn't want to go back and recalculate, the close for Friday, April 16, which was around the 83 area, 84. It's going to make the numbers a little different. So if the outlook's going to be a 4.9% increase from that date, this is the return that it would be moving to. And if we're going to have a reset in the market and a correction on those days, we're going to have a reset of 16%. This is the numbers here on the S&P 500 in case things do turn the opposite direction and the days are in here, how long it took it to recover from that period of time. And that's using the S&P 500 on the weekly, looking back on 3-year or 5-year range. Here is looking at the drawdown in case we do have a reversal from the high and low, looking at all scenarios in the market since of 2003, 2004, 2009. This is the S&P 500 numbers. And as you can see, we continued, these are the drawdowns and the draw ups. We can see that the drawdown where they were in relationship to the 41.28. This was done on 4/9. I didn't want to change the numbers because it's too much work to do the calculations. This is kind of giving you a scenario if we have a 4% increase and we come back and fall back. I have the 41.28 from that date. I don't have the 41.80 or the 41.70 to calculate the data. And if there is a drawdown of a 9%, we can see 3,700. If there's a drawdown of 6%, 3,880. If we have a drawdown of 1%, we can see it's just very little glitch. And if we have zero drawdown, this is where the average, even if we have a 3 or 4% correction in a short time, but the outlook for the 18-month would be great in the long term. And this is why I kind of used a McLaren here, 765 LT, because you want to drive on the road without crashing and making sure you understand the risk on the short term for an investor. On the long term, they don't have to worry about it. On the short term, as a day trader, you have to know the scenarios, what can happen in the market. And least but not least, this was done on April 12th. I gave that. You can freeze this video and you can take a look at all scenarios. One thing I did not cover here is the VIX, which I should go back to the chart and cover back the VIX. And what I want to do is do it on the weekly. I'll do the VIX for you guys and making sure that you understand the risk involved in trading and what the outlooks are in the following weeks. Let's go back here, take a look at the VIX. Since I did not do that, I will do that last. At least you guys can get something out of it. This is something to take a look at the slash, or you can do the VIX, which is the ETF fund for the VIX slash VX. We're going to go weekly time frame. We're going to go we're going to go daily. We're going to go outlook more than 20 years. Okay. We're going to go to a max. Instead of daily, we're going to go to weekly. And I'm going to push OK. And here are this is kind of crushed up a little bit too much because I'm going back to 1987, showing you every time there's a spike, there's usually a reset back up in the market. After the spike up, we fall back in range, and eventually after we do, we get, a reversal back up. You can see a spike up and a flat mean coming back from the mean back to norms, going back up. In 2003, this is the 90s. Here's a scenario in 91, 92. Here's the 1997, 94, 95. There's the 97 coming up, 2000. There's the 98, 90. Then the reset. This is why I'm you can draw these channels, draw them down and a breakup. And here's the 2000, technology bubble and the Twin Towers. Then we fell back down. He's the range bound market in the early 2001 to 2003. We had a couple of spikes. Then after the 2003, we fell back down, continued. Then the 2008 bubble, you can see those two spikes up. And what I'm trying to say is this: make sure you do a channel and on your drawings. And you can see that last one that we had in 2008, real estate bubble, the spike up and the reset. Let's go this way. You can see it. Then we had the 2010, 2013. Then we had, the 2016, 2018, the European zone, 2018, 2019, the trade wars. You can see that in the charts. That's the 2016 European zone. And let's go to the 2018, 2019 trade wars. You can see it here. Then eventually the pandemic on the COVID-19. Now we are in the reset. So you have to be open mind that every time we have a spike, we come back to the norms. And if this is going to be the line in the sand, do we get back on the other side in the VIX for a small correction or not? This is why I wanted to show the VIX. Hope this was helpful. I look forward to seeing you on Solstice ATR. Check us out, or on Twitter, and you can DM me on Discord. Take care.